All right, let's get ready to start this show. We're going to do some comparisons between the Eurozone stock markets and the U.S. I think you're going to find it really interesting.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go asleep.
Hi, I'm Steve Miller. Call me Slim. And this is the Slim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, this was a week where the stock market started out on the downside but reversed early losses on Monday and ended up with a pretty strong week. The rebound came after really just a brief correction, and we talked about there was only, we thought, a tiny window for the correction last week, and that came despite, well, what is a pretty good battle between the Republicans, the more centrist ones, and the right-wing, more conservative Freedom Caucus, and that battle seems to really go on. POTUS pretty much attacking now that part of his own party and trying to bring them together, even talking about getting together with Democrats. I doubt that's really going to bring them together, because that part of the party is really sticking to what they believe they were elected for, and that is much more true conservatism, smaller government, more balanced budget, and really overall that more sensible governance. So they're really sticking to it, and this idea of discussing with the Democrats, I think it's ridiculous, because they're really truly Donald Trump's mortal enemies. So whether he can bring them on board or not, I mean, it to me is not even a question. Stocks did remarkably well with this in the background, really, as the DJT agenda really slips into doubt, at least for this year, and who knows, remember 2018 are the midterm elections. S&P 500, NASDAQ up about 1% on the week, NASDAQ moving up to new highs, just as Amazon is charging on the upside and really leading the way. Dow Jones really a laggard in here and moving up just about 0.5%. But the Russell here, as we do this moving into the afternoon, up close to 2.5% on the week. Just a really, really strong performance by the lower tier of the markets. Bond markets were mixed. The 30-year had tiny losses for the week, 10 years tiny gains. And that's kind of an inflationary scenario creeping in, where the longer term doesn't do as well as the near term, and there's been some signs of inflation. We'll talk about that as we get into what the news items were for this week. The dollar had a stronger week. We did expect that to happen, and we thought the euro would be pulling back, which really did happen. The pound also moved down as a Brexit is here, as Article 29 has been engaged. Article 50, and that now they do go into this heavy negotiations probably over these next couple years, though the Eurozone, EU wants to do it a lot faster, and maybe that will get done faster. I actually love the British pound. I think that the yen, which was also down, and the British pound are offering some good buying opportunities, and for our members, we'll be showing you that in our short-term view as later on during this day. So the dollar really had a good week, but we don't really think that it's going to be able to continue. Gold, kind of an unchanged week, though silver was a lot stronger than gold was. and that is despite dollar strength. Now, that is a very powerful showing for the silver market, which often is the market that leads the precious metals. So with that strength coming in, well, maybe we're thinking a couple of weeks of a little more correction in this precious metals market, but it's like that engine is getting revved up to move on the upside, and we're liking it. Oil also stronger as it gets a rebound. Overall, the background news is pretty negative. The glut worldwide really is continuing. There's some talk about short-term projects versus long-term projects, and that some of the analysts and traders chattering about that, and that gave oil a lift, but we have some doubts about it being able to get very far on the upside. So for the stock market, there is a very interesting mix of background stuff going on. We're going to share some things with you right now as we look at some charts. As the U.S. market has been churning like the past 5 weeks, relatively close to highs, really, the Eurozone has really been quite strong, their stock markets. And there's a report out that I had just read that is showing in the last week or two that money flows into European stocks, European funds, were really strong, like 1.5 billion. At the same time, the U.S. had almost $2 billion in outflows, with the last 2 weeks having outflows. So the money appears to be moving in to the Eurozone and moving out of the United States. Now, that's despite the fact that we have the strong Russell, which is making a big recovery, not near its high, and NASDAQ moving to the upside. Our markets the last 5 weeks have been really quite mixed. I want to show you some charts in here. We're going to look at some ETFs of the Eurozone, 5 of them, and I'm going to show you my cyclical analysis on these, and I'll do a little promo on my cycle analysis a little later on in the show, but I want you to see these charts in here for the Eurozone because I think that they are quite significant in here. So let me get these charts in place for you, and we're going to switch over here to, we're going to look at EWU, EWG, EWQ, EWI, and EWP, the 5 of the major European market indexes, and take a look here at the EWU. So this is quite interesting in here. Now you can see our cycle analysis. For those of you that are new at cycle analysis, these are cycle brackets on the bottom. They measure the repeating cyclic action, and cycles are measured from low to low. So you can see this low right over here. You see where that low was. There was also a low right over here. There was one right over here. You could see that. And one right over here. So you could see the rhythmic action in there is really clear. Now what I want you to see is what's going on in here is that you have this upward motion going, this rally phase, this corrective phase, this rally phase, and this corrective phase right in here. There's no time left for it. And we have this bull wedge going on right over here. We think that you get maybe a week or two of little pullback in here in the EU, but then we think it explodes in here on the upside. This is a very powerful pattern when we look at that. So let's just look quickly at these other ones. This is Germany, and you could see even a more powerful pattern. We just did a video on inverted head and shoulders and what they mean, and we did that on Friday for our members. Look at this giant inverted head and shoulders right in here, and the measurement is way up over here, and you could see this little cycle correction and then the big rally do. Well, that's why we have this projection right over there in EWG. That is a super bullish pattern. EWQ, this is France. It's already storming on the upside in what we consider to be a very bullish pattern. So you can see that. EWI, which is Italy, which has huge problems, of course. And here you can see Italy just having almost no time to correct in here. Maybe a couple weeks down and then looking like it's going to power on the upside. Look at the rally phases. You see this one here, and this one here, and this one here. And yes, this one here. That's what we're looking at in these cyclical rhythms. items which are quite powerful. And the last one we're going to look at is EWP, which is Spain, and you can see in there we have those envelope patterns in there. It's those two blue timing spikes here say this is the time frame for this correction to be over, which we're talking about a correction where it's trading on its highs and then turning up in some very, very strong ways. So that's a look at the European markets, which are just, you could see, immensely strong. Now, there's something else that I want to talk about in here. Arvi, our technical analyst, he shared a chart with me this week that I thought was very interesting, that I'd like to share with you also, that I think is going to make some sense to you. Now, I've talked recently about a deterioration going on in the U.S. markets, where the leaders from before, other than a few of the tech stocks, they're basically having deteriorating patterns, which makes me worried. I get concerned about these deteriorating patterns, is that they have a message. Well, here's another way to look at the deteriorating patterns right in here, and take a look at this chart. Essentially what we're looking at here is, and thanks to index indicators for this one, is the black line that you see in there, that is that rising line is the S&P 500, and you can see in here moving up all this year is what we're essentially looking at. Now, there's been some corrections in there. Note this one right over here. And this right over here is the deterioration. This is the S&P 500 stocks, 20-day highs minus 20-day lows. And you could see the deterioration in here that brought a correction in the market. Look what's going on right over here. I mean, this is a massive deterioration going on. And that simply says that the market is looking like it is certainly weakening. And even though we see the NASDAQ storming up to new highs, there is some concern that the what we're seeing in there is just a thrashing essentially in the market. And what it looks to me is that there's trouble brewing for the U.S. stock market. And if I'm right about some of these other scenarios where the dollar won't continue its rally, the euro gets stronger, the British pound gets stronger, the Japanese yen gets stronger, that's all going to mean outflows from U.S. denominated assets. And we're likely to see the stock market struggle. And I think that what we just showed was that there's a pretty good chance that we're going to see the European markets do much better. Maybe that's the place to have money. So I wanted to show you that, and I think that was really, really interesting. Let's take a look at what happened here in the last week as we look at our 60-minute chart of the S&P 500 and take a look at the interday movements. Of course, the areas that are in gray are the overnight trading. The areas that are in white are the regular day trading, or pit trading as we used to call it. So Monday, you could see the market started out really weak right in here. They were down pretty solidly, but then recovered right in here and actually ended only down a little bit for the day. It was really a huge recovery in there. Worldwide stocks got hit pretty hard on fear about Trump agenda failure, and Donald Trump rolled out sessions and really took a hard line on sanctuary cities. So it's a pretty good sign that he thinks he needs to look at other things that he can get done on his policy. And I think it's he believes that the struggle is going to continue. So he's probably going to roll out, as I said to somebody else, more discussion about the wall. And that's why I'm going to talk for the second week in a row to my members in the member short-term view about the Mexican peso and the risk that I see in there coming pretty soon. So on Tuesday, we saw world stock market stronger, bonds strong, gold strong, silver strong, all strong as the markets just surged on the upside. Something interesting right on the close here, there were a lot of sellers in the S&P 500, and we saw them close at a pretty good discount to the cash. So because some good selling came in the close, but they were really buying selling everything all day long. That selling didn't mean a lot. I mean, overnight they were really flat, then you got a rally back and they really churned sideways really on Wednesday. You can see that. Amazon really led the way as it makes another new highs, lifted the NASDAQ. Oil got a pop of 2%, and the Fed heads were really out talking. And Fed Williams and Rosengren came out and they were talking 4 hikes in 2017. And this is one. Williams comes out and he says the economy is back to normal. Well, if the economy is back to normal, why the heck are they still at 0.75% on the discount rate? I mean, the Fed funds rate. I mean, there's something really sick there. And this really gradual approach to rate increases. Where are those old 0.5 point increases and moving them up 3 points in a year? Well, they're really afraid to do that because they know that the recovery that they engineered is really at risk, so they're going to just take a little tiny baby step at a time. It's nauseating. You can see actually a similar action that happened here actually happened on Thursday. Also, GDP news, GDP was stronger, revised up to 2.1%. Corporate profits, best since 12, up 9.3% year over year, and that's sustaining. If that can be sustained, that's a good value. A support for valuation of the stock market. Stocks moved up earlier, you could see, and chopped. Well, here we come to the end of the quarter here on Friday, and we see world stock markets. They were overnight softer. We had a little attempted rally in here. The markets couldn't really hold, and then as we move here into this, with only an hour and a half or so left in the day, the market is starting to weaken in there, as you can see, and that is maybe setting up something that we're going to talk about for later in the week, so in the coming week. So the news that came out today, consumer inflation was actually stronger, up 2.1% year over year, takes it ahead the Fed target, and bonds barely noticed, and U.S. stocks were quietly up as the NASDAQ is still really so much stronger. Google is not able to tick up. I really want you to pay attention to Google because that's pretty significant. Let's take a look right over here as we look at our calendar for the week. Let me get that set up properly for you. And you can see right there is some important news coming out. Monday, Tuesday, not much. Wednesday, we have the ADP, which is the private sector employment, and also have the Fed minutes at 2 o'clock. And on Friday, we have the employment situation, so that's always a market-moving number. And as far as earnings go, we're still got to get through the end of this month before we move in a couple weeks into the earnings season. So there's not much. So Walgreens and Monsanto on the opening on Wednesday, Bed Bath & Beyond after the close on Wednesday, and CarMax and Schnitzer before the opening on Thursday. So that's basically it here as we show you the calendar and the economic reports, which are eventful as we get towards the end of the week. That is the look at our opening segment, and we're going to be right back as we look at our best and worst stocks for the week. All right, we do this every single week. We take a look at our universe of stocks. Our universe of stocks is about 325 stocks. We look at specifically the widely held in the S&P 500, and that covers, of course, everything in the Dow, a lot of the transports, and we also look at a lot of the second tier in the Russell also. So basically, our universe is made up of stocks that most people look at. And if you want to get that watch list, if you use TOS, you can go right in resources, and you can download that watch list and our other focus list watch list, some other ones we have in there too. So if you're interested in that, you can, I think, really benefit in tracking those more widely held stocks. So we're going to take a look here as we look at our best and worst stocks for the week. Let me get my notes in place, and we're going to switch over and look at the best stock for the week. So this is an interesting one as a best stock for the week. This is Sears SHLD. Now, you know I've been crazy bearish on this one and on JCPenney, and that has been really, really right. Well, we're going to take a look here as we look at SHLD, and we actually were in a window, and I've had an amazing number of people write me on this one, basically wanting to know what's going on here. Why are we getting this big up move? And cyclically, based on my analysis, it really came at the right time, and I don't really have any issue with it in the overall bearish scenario. Some analyst came out during the week, said he was a fan of the stock. He put a bullish comment out there and said he still likes it. Well, I don't know how long he's been still liking it. Was it from $45? Has it traded all the way down to $5.50? But the stock has doubled in the last 6 weeks as it trades from $5.50 up to about $12. Let's take a look here at our cyclical patterns on this stock, and you can see this right here. Basically, you could see the low that came right over here. This one was a little bit off. You could see that, and here's where the low is here. So all of those are suggestive of the fact that those were important lows. There was one right here and one right here. So you could see the rhythms in here. Rally sell-off, it continues on the downside as it stair steps down, and a new low, and then the rally came at the correct time. You can see that exactly. Gets up where it normally would fail. It's this downtrend line you see right over there, and this 34-week moving average, and then starts to pull back. I actually think that Sears could bounce around a little bit more in here, and you could get some rumors, and the shorts may still cover. But overall, I think that this is a horrible stock, and I don't think there's recovery as far as the company goes, and I think that the shorts are just scrambling, and before you know it, there's going to be negative news and it'll be moving down again. Note the implied volatility in here is just soared to about 115 in Sears, so they're really got the shorts by the you-know-what. Let's take a look here at Dillard's DDS. This was up 12% on the week. This we still have as a negative stock, even though it has this bullish engulfing right over here. That probably says that the low has been established. So 46, 47, we think we'd get another trip down there in the next 5-6 weeks in Dillard's, but it was a 12% week. JWN we like better. This pattern in here, you could see the megaphone right there. That is a pretty good bottoming pattern. It also comes at the bottom of our cyclical nested lows right in here. You could see that, and then turns up right in here. We think it's going to make it up into this resistance zone somewhere between 50 and 52, and then probably roll over again. This is a very bearish longer term pattern, so we think it's in a bounce, and that bounce probably still has time. JCPenney also bounced. This low came at a pretty timely spot in there. Again, we're only looking for some modest upside in here. The stock could trade 7 on the way to 2, but I still think this is the most expensive $2 stock I can see. So I'm going to keep bringing that. GameStop down 10%. There it's a troubled stock, and their model is really struggling. ANF down 9% on the week, and they're in a bounce and a negative, but while we're in retail, we have to look at Amazon. This is just an absolutely incredible pattern. So again, remember, we look at cyclical analysis, and anytime you get nested low periods, is when the stock goes into corrections. I mean, is there any question in your mind that this absolutely lined up with every single correction? And here was the period here, and it ran out of time with just this little sideways dip. And then when you got into this rising phase right over there, well, it exploded to the upside. We would consider this the first week of the new advance. So look what happened here on the first week of the new advance. And, well, it went up for another 3 months. We have analysts all over this one, raising their targets to 1,000, 1,100 on the stock. I can't even argue with it because the pattern is so incredibly powerful. There's a 50% extension right there at about, we'll call it 895. Maybe it stalls over there for a little bit. But overall, it's great. Now, the only way to turn this stock bearish is if it moves down under this number here at 833. It's really not a good likelihood we're going to see anything like that. So you just got to keep buying dips here in Amazon, as it looks incredibly powerful. Also, in the best of the week, the oil group had some pretty good moves, and I think there's some temporary lows made in some of these. We're going to look at Whiting Petroleum, WLL. That was the only one with any news in here. Really was ConocoPhillips, COP, and that stock really is kind of looking like it's bottoming to me, and its timing is right for it. Interesting, the cyclical rhythms are very long in here. These are unusually long, but that engulfing pattern is signaling the bottom here of this corrective phase that you can see right in there, and that says that you're likely to see more advance. Also, you can see kind of this pattern going on right in here, and it's a wedge, and the target would put it up here at around $11.50 or $12. So we're thinking that this stock could get a continued move on the upside. COP, as I said, that stock really got a nice pop in here, and there's your engulfing in your first week up. There's a lot of resistance up in here. We're looking at a move up to about maybe 52.5, 53. That's not much of a move, and the oil environment is just not very good. But COP up 14% on the week. That's a very good move for that stock. And Marathon, here's the same kind of a pattern. Now, these have our colored phasing in there. So the green phasing is the rising phases. The yellow is the corrective. You can see that as it shapes up right in here. And the corrective phase ended a little bit late. It gave a lot of ground in here, so we think it's going to stall in this intermediate resistance area, but note the upward channel, the uptrend. So our target on the upside in here on MRO is, we'll call it between 1680 and 1740, so it still has some room on the upside, but like I say, overall, I think the environment for the energy stocks is just not good, and I don't think that these rallies in here are going to last very long. We're going to look at a couple materials right now. FCX had a big gain in there, and I am loving the copper pattern. I think I'll cheat a little bit and show you a longer term pattern in copper, which isn't something I normally do in here. But let's take a look here at FCX, and you can see that there is a bottoming period going on in here. What's really interesting is that you can see in here, this blue right here is the DBB. That's the base metals. The copper pattern is this one right in here, and then this black line is FCX. So I have them all overlaid. So I can see a bottoming time period right in here, and then a rally time period right in here. The question is FCX going to be able to be bullish, get above this resistance here, or is it going to roll over? Right now I'm giving it a rolling over, but the copper pattern is so strong that I think I might be pessimistic in this analysis. I'll show you copper. So you could see this engulfing. It engulfs the last 4 weeks in there. That's a super looking bottom in my opinion. So we're going to look at FCX to rally up between 14.5 and 15 from its 13.5 level right now. That looks pretty powerful. Take a look here at the copper pattern. This is an immensely bullish pattern. So, of course, this has got some pretty involved analysis on it, but I just want to show you this cycle bracket right there. Look at the rally and the sell-off. Look at how it followed that. Look at the rally and the sell-off, and the rally and the sell-off. You can see how it followed that. Now we're moving into this nested area of rally, and we think copper is going to explode on the upside right in here. So we're loving copper. We think it's going to get over 285, maybe 3, and that's likely to be the reason why our more pessimistic analysis in the FCX chart, maybe we're going to have to revise that. U.S. Steel up 9% on the week as Trump sends off some anti-dumping rules over to the EU. And that's gave the steels a little bit of a lift. This is really not a good pattern in here, and being that it tested that important low, we actually believe that this one is going to fail and roll over, and we're going to be putting out what we call a short setup pretty soon here in U.S. Steel. So we're looking at that one to move in on the short side. So that one looks to us like it's just a temporary bounce based on that news about the anti-dumping rules in the EU, for the EU. So one more stock I want to talk about that was a stock that I referred to a couple of times this week. That's Chipotle, up 9% on the week. It had a fabulous move on the upside from about Tuesday. And this stock we featured on a tweet, and also we featured in a video that we did regarding the what head and shoulders patterns mean. The deeper meaning for that. And if you're not a member, you want to become one and really see these kind of videos, because it teaches the real depth of charting that goes way beyond the little lines and squiggles that you see on the charts. It's really feeling the meaning of the chart. So I really want you to become a member and watch that and really get a sense for it. I've gotten some great emails from our members on it. So I want to put up this Chipotle chart in here so that you can see this pattern in here. And I think that you're going to see why we are liking this pattern. So Chipotle, of course, went through a really tough time. They had some health scares. Some people got sick. And they lost a lot of market share. And the stock plunged from the mid-700s down to the mid-300s. 400-point loss on the downside as it moved. Remember I showed you a megaphone pattern just a little bit ago? Well, as it moved down from a megaphone top and then ran into all of those problems. Right over here was your megaphone top. Now we talked about an inverted head and shoulders pattern forming and now breaking out. So we've been talking about this for quite a number of weeks. There is your inverted head and shoulders right in here, and your breakout right over here this week. Our measurement is up here in the area of about 525, 530. So we think there's another minimal of 70 something points on the upside in here. The cyclical rhythms are suggestive of the fact that it might run into a little trouble at the top of this area and pull back for a few weeks. But then we think after that it's going to surge, and it might surge first and then pull back. So it's really hard to say, but this is a great pattern in there. And gotta say that I am really, really liking that pattern in Chipotle, and I think that that does a good job of rounding out our best of the week. In a moment, we'll have the worst. All right, for the worst of the week, well, this is an interesting one. Lululemon, they got their color mix bad. I guess people were bored with their yoga pants, and they've got creamed in here. I mean, it's one of the biggest declines I've ever seen in this stock, and it's one of those giant declines that you hardly ever see in any stock. That's the problem with retail. And I was in the retail business, believe it or not, when I was 20, till I was about 24 when I became a trader. Had retail stores, tie stores and pants stores. There's a little part of my history you probably didn't know about. So I think that I'm a good handle of how you can mess up when it comes to your inventory situation. And Lululemon, I think, is paying that price in here. Look at this chart in here. Now, what's really interesting about this is the chart pattern overall, the bigger pattern. Now, note this big pattern right over here. And you can see clearly the rally and the sell-off that comes to the proper timing. You see that? And then the rally and the huge break in here when they had trouble before with their pants that were too far see-through. But they rallied back up right to the 61.8% right over there, and then failed again on this massive decline in this last week. Stock down for the week 19%. And that is a pretty bad scenario. It's going to probably figure out how to get past that. The timing-wise gives it another 3 to 5 weeks in here. But when you look at the massive decline in here, and note I'm switching to the daily chart in here. We had this downtrend in here, and just before the earnings came out and they made this announcement, the shorts all covered. It looked like a breakout right there, and man, was that ever bad timing. Look at this massive plunge on absolutely massive volume, and it's really hard to recover from that. So that's your weekly chart on the left and your daily chart on the right, and that's how all of our members get all of our 320 charts and everything else all within this one chart grid. So that is the decline that you can see in Lululemon. Now, there's not much on the downside in here for the weaker stocks that I'm going to show you. Take a look here at the golds. The golds were the next group of weak stocks, and this is while gold had just an even week and silver moved up. We cautioned about the negative patterns and that there was likely to be a downtick in these precious metal stocks. We were short PAAS, and this is what you can see when you get into these declining phases. They're getting sold despite the fact that gold didn't break, and gold's been pretty strong. So we're getting this pretty bad downside move. GG down about 10% on the week. AU moves down also. This one about 7% on the week. You could see this has maybe another couple of weeks on the downside, but we think they're going to do really well after that. Rand Gold, one of the better traders in here, setting up a monstrously bullish pattern. As you can see, our cycle forecast right here, maybe 2-3 weeks on the downside right there, and then we're looking for an explosion on the upside in Rand Gold. And PAAS, which is much stronger because silver was stronger, was only down about 3%. So our subscribers had an opportunity to still make some money on that. And now, because it's relatively strong, we're pulling that short side setup in that one with just a moderately good opportunity to have made some profit. All right, the last stock, this is a short segment, isn't it? On the worst of the week is FFIV. This was a Deutsche Bank analyst went to sell on DIIB, and that moved the stock to the downside. I actually think that they're not off really on this pattern. You can see in here, and this is an M top beginning to form right in there. It's okay that the high is a little bit higher at that point. Note the small patterns in here. Now I'm going to trace those out for you, and you can see how beautiful those rhythms are as the stock goes up and down, right? You see that? And now, I'm sorry, I drew that wrong. Here's where this one is. And that looks like this decline has got maybe another week to go But then we think that that next uptick that we'll get in there will be a sell opportunity and then move to the downside. So that looks to us like that pattern is starting to turn negative. Now look here on the daily chart. Now you can see in here this evening star pattern right there, and the downside gap and the momentum, upside momentum being lost right there. That's that little blue arrow. Here's where the upside momentum turned strong, and you could see that. Here's where it's turned neutral, but note the bear flag that's going on in there, and that's a bad pattern in there. And I think that we're going to say that this stock has got some downside risk. So not only is that in the worst of the week, but it's also a pattern that I think is one of the worst of the week, and maybe some pretty good opportunity for you. So that is a look at the worst of the week, and now we're going to do our short-term view of the stock market. All right, this is our short-term view of the stock market. Before I tell you about that, you've been looking at our charts here, and I'm sure a lot of you are fascinated and wondering, well, how do we do a lot of what we do on these charts? And I know a lot our members that get our charts every single week are really steadfast, loyal members, and know they know the value of them. I want you to go onto our website, go into the resources at the top of the front page, and look at in trainings. And look at the Slim Charts training video on there. I think you're going to find it really informative and really interesting, and that'll give you a sense for the kind of work that we do and some of the other studies that we put in our charts. We do all of this labeling. We look at all the candlesticks. We put in our cyclical projections. We actually mark off the cycles as we see them. So, and we do that for all the stocks plus futures and ETFs and the indexes. So it's just a massive amount of information. And RV, our technical analyst, and I spend literally hours and hours on these charts every week to bring them to our members. And then go to the membership, and if you can look at the membership page for level 4, and you'll be able to see how to subscribe and get these charts on your TOS platform. So I think that you will be really pleased if you at least watch that video and learn how we do this, and it'll give you some clarity, and I think you'll find that really valuable. All right, let's get into our discussion of the short-term view for the stock market for the coming week. We always want to do an accountability of how we did in the past week. And as far as the stock market goes, now overall, for all 5 major markets that we do for our members, we were really good. We were in the area of about 65%. The stock market, we basically had a bullseye. I mean, it was just a great call. We expected 1 to 2 days that were weak, and we got only Monday on the downside, and then that the S&P 500 would move up and move up to a level between 2363 and 2369. It's right in the middle of that right now as we do this on Friday, which is just an absolutely great thing when we have that great of a call. I think that you're going to appreciate that, and I think that what we have coming up for the next week is also going to be pretty good. So here you could see trading right up in that resistance area, trading at 2366 right now, which was right the spot that we expected it to get up to. We thought it would come down early and then rally, and that's what we got. So it's spot on. Now, I want you to see the smaller cycle rhythms right in here. These are 9 to 10 days. That's this right in here and this right in here. And we're in this rally phase right there. That also is nested with the bigger one. So what that tells me was that we were going to get a rally, and I had said last week that the window for this decline was closing. I didn't see it being able to get down the 5% that I expected it to, and this was really some 3% decline right in there. So what do I think we're going to do for the next week? Well, I think we're going to get a midweek dip. This pattern right in here is suggestive of getting a dip into somewhere around late Tuesday to early Thursday, so we'll call it Wednesday, and that it will come down and it'll test the area of 2352 to 2346 in that rising minor support. Now, if we get a little rally early on, it's going to lift those levels by a little bit, but then after midweek, we get this again. So if I'm right and we get that pullback and then get the rally, the quality of this next rally is going to tell us a lot. Of course, the amount of the dip is going to tell us a lot also. What we want to know is what the power is on the upside. The more powerful the bigger patterns are, the smaller the dip will be, the bigger the rally would be. If the pattern is not powerful, and if actually what caused this to roll over is still there, then this is going to dip harder. This rally is not going to get anywhere, and you'll be in a more negative pattern. We're not going to call for the more negative pattern. We're going to call for the, somewhat neutral to even more bullish pattern, and that the probabilities are going to still be there that this rally right in here challenges the high up at around 2400 at some point. It might be this rally over here that does that, but we still think we've got quite a number of weeks of this sideways chopping, thrashing, where the money, as I said, is moving into the area of the Eurozone versus into the area of the U.S. stock market. Made that point earlier in the show. So we're going to call this a small week, really a small change week, because we're looking for a dip and then a rally, right? So I don't think that the market's going to be able to make much progress either way for the week, and really probably in that range of 2346 to 2370, something like that. So relatively narrow range, down, up, and then being able to evaluate that and see what the next rally looks like after that. Man, I hope you like that. If you're watching this on YouTube and you like this show, make sure you put a thumbs up in there. If you put a thumbs down, make sure you write me a note as to why you didn't like it, because I want to learn from your feedback. Always want to get your feedback on this show. We work hard, Avi and I and the whole team, to bring this to you, and getting you to be a subscriber is really important to us, because then we can continue to thrive, continue to grow, bring more information, and then essentially raise your odds of success. I hope you've loved it. I want you to be really careful, because there's no doubt it is so crazy out there. And I'm always wishing you great trading.